Okay, and good evening. Welcome to Independence Regional Library, where Angelica Figueroa will be presenting money management through transitions. She's with the Sharonview Federal Credit Union. She'll be discussing surviving a financial transition, whether involuntary or voluntary, making changes to your budget, dealing with debt, and what resources are available. Um, let's see here if I can move down. Um, she will be presenting today. I'm the facilitator this evening. I'm Christy Buchanan Wellman with Independence Regional Library. And these are just a few housekeeping things so far as Zoom recording. Um, Whenever you are logged into the program, you are muted by default. If you'd like to ask a question, of course, just unmute. We also encourage folks to turn on their cameras if possible, but that's not mandatory. You can also use the chat window if you feel more comfortable about posting questions there. Also, links to resources will be shared here. And let's see here. Just to let you know, the program is being recorded. If you do not wish to be recorded, you're welcome to turn off your camera or edit the information that's displayed in the Zoom chat. We'll try to edit out personal information at the end, but we just wanted to let you know that it was being recorded. And as always, thank you for your support of Charlotte Mecklenburg Library and Independence Regional Library. So I'll go ahead and get out of there and let Angelica step in and be the star of the show. We hope that you enjoy it.
Great. Thank you so much, Christy. I'm going to go ahead and share my screen. Hope this is- Okay, perfect. And Christy, do you only see my presentation? Do you see notes along with it? You're on mute.
Oh, I'm sorry. All I see is the presentation. I'm sorry. Do
Perfect.
I
Good.
need to unshare
Nope, you're
anything?
good.
Okay.
Nope, no, because I've had some issues where it was not viewing correctly, but it's
Okay.
perfect. So
Okay.
just wanted to make sure. Sounds good. Well, thank you all for joining this evening. Thank you, Christy, for the opportunity to present this presentation this evening. This is a very, very great and important topic. Simply because it is what the experiences that we have had to experience, right? Not only at the beginning of this year, but also all of last year, right? Never in a million years would we have thought that we would be experiencing a pandemic, right? That would disrupt the global economy, right? Or even our paychecks, right? So unfortunately, our finances do feel the effects of these types of events across the globe. And this is why I think that you being a part of this presentation this evening, it would provide you with some really good tools and resources, not just for what we experienced in 2020 with the pandemic and moving on into 2021, but and beyond. There's going to be experiences in our lives that we are going to have to deal with, right, on a daily basis or monthly basis, short term or long term. So this evening, this presentation will provide you with, how do I prepare for this, or how do I plan for it, or what are the resources that are available in the event that this happens again. And again, not necessarily just a pandemic, but anything that could be either voluntary or involuntary. So of course, financial transitions can be challenging for anyone. I know that early in March of last year, and I can speak from experience, my husband, the minute the pandemic hit and everything shut down, we got the phone call, right? We got that phone call that we didn't want to get. My husband was furloughed. So of course, we're like, okay, well, what do we do? Fortunately, this is what I do, just for the experience. So we were prepared to handle our financial situation at that very moment, simply because, again, we never prepared for a pandemic, but we prepared for the what ifs. It could have been anything. So we knew exactly what we needed to do, because we knew that we didn't know whether his employment situation was going to be either short term or long term. So we had to sit and discuss, assess our finances, restructure our spending plan, as well as restructure our entire budget. So in this evening's presentation, we're going to discuss, can you survive a financial transition? And this is something that's extremely important. And why is that? Because we want to make sure that we can survive a financial transition, because we never know how long this transition is going to take place in our lives. It could be short term, it could be long term. Have you assessed your finances? So whether you are not experiencing a financial transition at this time, it is extremely important to make sure that you assess your finances. Know where you stand financially, whether it's how much do I have in savings for those emergency purposes? You know, what is my worth? If I'm a homeowner, how much is my home worth at this time? So those are the types of things that you would need to assess in your personal finances in the event that there is some type of transition that affects your household or your finances. Do you need to make changes to your budget? That's extremely important. I learned from the experience of my husband being furloughed last year, and just, you know, having to restructure my budget. I learned that it's important to take a look at my budget and restructure my budget from time to time. I had to sit back and, you know, it opened my eyes and say, okay, how do we restructure this? How can we cut back on certain things so we're able to afford the things that are top priority in our lives, right? Which would be the things such as my mortgage. You know, I need a place to live, so I have to make sure that gets paid. What do I prioritize? And what resources are available to you? There are a lot of community resources, not only within your community, but there's also, of course, with the pandemic, there were a lot of relief resources. So whomever you had loans with, if you had a credit card or if you had an auto loan or, you know, any type of loan with any financial institution, they were providing some relief services to anyone who may have been furloughed or even laid off permanently, whether it was deferring their payments. And they would tell you, if you made a phone call to any financial institution or any lender you were doing business with in 2020 or have been doing business with, the first recording that will pop up is, if you have experienced any financial transitions or financial changes, please contact us so we can help assist you. So they were offering those types of assistance, and they may still be offering some of those types of assistance because our economy is sort of trying to get back on track now. A lot of companies are trying to get back on track now, right? So people are starting to be either rehired or back employed, or they have found other employment. But they were offering these services. I can speak for my institution. They were offering these services as well. But there are tons of organizations and lenders were offering these types of services. So financial transitions, let's first assess your situation. What type of transition are you facing? So it all depends the type of transition that you're facing. Is it, you know, loss of employment? For last year, for many individuals, it was loss of employment. A lot of people were laid off or furloughed. Or is it something that happened due to medical reasons? Again, this is a program that's going to be able to assist you for, you know, the beyond of what we've experienced in the last year. So this can mean anything that may be involuntary or even voluntary. If you know you're planning for retirement, this is a great program to be able to provide you with the resources to kind of prepare you to where you are now and where you would like to be. So, you know, and I'm going to ask you, I'm going to ask the participants, and you're welcome to put this on the chat, or you can unmute yourself. What are some financial transitions you think you might go through, or anyone might go through?
Loss of a job.
Mm-hmm.
Anybody else want to share, or you can post in chat if you like.
Loss of spouse.
Mm-hmm.
Mm-hmm.
Mm-hmm. Yep, that is absolutely right. And some of these are, you know, involuntary, and then some may be intentional, right? And we're going to discuss a few of those now. So these are some of the intentional transitions: a career change, So again, going back to 2020, if you were laid off or you were furloughed and you were now seeking new employment, perhaps the new employment's pay was not the same as what you were being paid previously, right? So that can be a transition that, it's now at this point intentional, but you have to make sure you restructure and assess your finances so that your new income balances out in your budget. Retirement, right? That's an intentional transition. You want to make sure you prepare for the future. So you want to make sure you prepare for retirement. Divorce is another one as well. So a lot of the times when divorces happen, finances happen. And, a lot of the times finances are not the best. There are certain situations that are not the best when it comes to divorces. Family responsibilities as well. Your family grows, right? Your family grows, but your income stays the same. So now you still have to make those different changes as well. So some changes are going to be intentional, right? And some changes are not going to be, they're going to be involuntary, right? Now let's talk about some of the involuntary transitions, things like loss of income, right? Just like Christy mentioned, laid off or furloughed, whether they'd be reduced or completely eliminated the job loss, right? Or disability, if something happens and you are not able to work and you are now disabled, which means your income may become fixed and maybe less than what your previous income was. And then as Marie, I don't know who mentioned it, I'm sorry, someone mentioned the death of a spouse, right? Death of a loved one, that can take a huge effect in your finances as well, right? So these kind of changes affect your finances, but they are out of your control, right? So some of these things are out of your control. So all you need to do now is, because they're out of your control, is let's go back, assess our finances, restructure our spending plan and our budget so that we can make, we're able to live comfortably and not feel like you're just living to survive. Okay. So assessing your situation, you want to give thought to how long your financial situation is going to last, right? It can be, 3 to 6 months. There were people last year, my husband was fortunate, he was laid off for about 3 months. He was laid off and then he was called back in and then he was laid off again. So because they kept closing the plant. So, every time they closed his plant, they would lay off and it was, lay off without pay. They would close and it was no pay. So of course, and for us at that point, because they had done it multiple times, unemployment wouldn't even hit by the time they would call him back. We weren't even sure how that was going to work. So we didn't even collect unemployment. We just figured let's restructure our budget just because it was those short terms. Had it been something that we knew he'd be laid off long term, then we would obviously, definitely have considered it. So of course we restructured all of our finances to make sure that we were okay and comfortable until he was called back. And fortunately, he was called back. So again, will it go back to normal in 3 to 6 months or longer? All right. Or is this a permanent change? Because it can potentially be a permanent change. Your answer to that question may affect your methods for handling your strategy. And that's why, going back to what I said, when my husband, they called him back, then they laid him off again. So we would have to, luckily we had restructured everything. And then when they laid him off the second time or furloughed him, we were okay, well, we're on the right track, so we're okay now. But we were still preparing for anything that may have been longer than the time frame that they had furloughed him for. So is this a permanent change? Oh, sorry. And again, just for example, if you know this is going to be a short-term issue, you may be able to speak to your creditors and see if they may be able to defer payments for a couple of months. I know that a lot of mortgage companies last year were allowing homeowners to defer payments as well if they were being laid off or furloughed and they were still waiting on unemployment to kick in, so they will allow them to skip a couple of payments. Of course, I believe some mortgage companies were still tying that to the end of the loan, but they were able to help defer those payments so that you didn't have to worry about having late fees or it being reported to your credit report and things like that. So in order for you to even, if you're in a situation where you have now had a something has affected in your life, right? And I keep using the pandemic because the pandemic affected everyone, us here in our country and globally. So if you were affected in any way or have been affected, or in the event that you were affected, what you're going to want to do is you're going to want to figure out how long you're going to be in the situation, and then look at your bills and see how much you need to survive this transition, right? To be able to still live comfortably during this transition. So you're going to start with your net worth, and this is extremely important. Your net worth is going to tell you exactly where you stand financially. And what you're going to do is you're going to assess, what you own, which is your assets. And in this example here, for this individual, their home value is at $250,000. They have a life insurance cash value of $60,000, a vehicle that's worth $3,000, right? And then you're going to assess your liabilities, what you owe. So in this example, again, the mortgage is $150,000 is what they owe, but they do have some debt, and they have student loan debt of $45,000. So their net worth is going to be $118,000 for them here. So what you're basically doing is you're taking everything that you own, you're assessing what you own, what the value of what you have in the items that you own, such as your home, your vehicle, and then you're taking your liabilities, what you owe, and looking at the balances that you have. And in this example here, it's $150,000, and then they have a student loan of $45,000. Okay, so the idea is if you need to liquidate or sell assets to repay your liabilities. So this is what you're looking at. You're looking at to see what you have. Perhaps you can, for example, in this case here, this person's net worth here with the home value, perhaps they could have refinanced their home and maybe minimize the payments, or have the equity in there to be able to liquidate and sell or pay off some of their assets, such as, like the student loan and things like that. So this is one example. The second example that I'm going to show you is not very different. Sorry, my mouse is very sensitive. The second example here for this individual, they have their home value of $100,000. They have life insurance cash value, which is what you own, of $60,000, and they have the $3,000 vehicle. And then what they owe is $150,000 in their mortgage, but they have student loans of $65,000, right? So let's say we have this person where their house isn't worth quite as much. If you can tell in this one, their house isn't worth quite as much. Perhaps the mortgage is upside down, meaning they owe more than it's actually worth, right? But they also have more student loans. So this would mean that their net worth would be in the negative in this case here. So of course, now you're looking for things to be able to liquidate some of those assets, right? Calculate your own net worth. So you're looking for some of those assets, they have to be able to help pay for some of those liabilities. So again, looking at that life insurance cash value, is that something that you might be able to liquidate to be able to help cover the student loans in this case? Because the mortgage, the house is only worth 100 and their mortgage is 150. So this is a second example of one that would look like if the net worth was in the negative. So again, going back to your own net worth, calculating your own net worth. So this evening for your homework, try to get, if you have the moment or whenever you can, go back and, assess your finances and look at everything that's your assets of what you own, and then look at everything that's your liabilities of what you owe. And this is in a situation where you do have some type of money transition or some changes in your life that are going to impact your finances. This is a great way to start assessing your finances. So now that you know where we stand financially, right? We looked at the two examples of how to look at your net worth and know exactly what you have of value and what you owe. So what you own and what you owe. Now that you know where you stand financially, it's time to figure out the resources you have around you. And there are several resources. So always make sure that you seek out, again, loved ones, sometimes it's hard, to have to reach out, but, seek out to loved ones if the assistance is needed, or your community. Towards the end of this presentation later on, I will provide some links to different resources that are available, not only in your community, but online. Actually, these are online websites where you can go in and they can tell you there are resources within your communities in the event that you needed some financial support. There are tons of other services as well that you can, seek support from, such as, community services. Again, going back to your companies, whoever you have, your credit card company with, or your car loan, or your mortgage with, and finding out if they have resources to be able to help you so that you don't default on any of the loans, or, the debt that you owe, you don't default on it or gets reported negatively to your credit report. There are, we partner with an organization called Green Path Financial Wellness, that they provide all these services to members of the community. Again, you don't have to be a Sharonview member to utilize their services. And I'll discuss a little bit later on the types of services that they offer. You just have to be a member of any credit union. It doesn't have to be a Sharonview credit union. It is a free organization for you to be able to contact and ask questions if you need, and they can provide you with additional resources as well. Health insurance, healthcare can be a big concern, right? If there is job loss, if one person in the household has lost their job, and they were the provider of the healthcare services, but you're still employed, your employers, typically you can probably add someone to your health benefits, or, again, contact your human resource department or your state commissioner for insurances to find out your rights and the next best steps for you. And then, of course, most importantly, it was very challenging for all of us in 2020 to stay positive because of the uncertainty of everything that was going on around us and around the globe. But, having that positive attitude is extremely important, to know that there is light at the end of the tunnel and that there is hope. There's help and there is hope. I know that we all felt, helpless and hopeless because we did not know, what was expected of this pandemic, and we still don't know what's expected of this pandemic. We are slowly recovering, right? We're slowly getting back to a little bit of normalcy, but there is hope, and we all know now, as we sit here this evening, that there is hope for the future to be better. So staying positive, it's extremely important, for you, for your mental health, for your physical health, to make sure that you do not let this, get you to a point where it stresses you or you feel like you have that load, because there's help out there if you need it. So we've now learned how to assess your funds, right? By knowing what your net worth is, knowing what your net worth is, right? Knowing what you own, and the worth of it, and then what you owe. So now creating a spending plan is extremely important, as well, only because your spending plan is going to affect and determine how you budget your finances for this new way of having to do your budget and your finances due to whatever you've experienced, whether it's the loss of a loved one, job loss, a medical reason you cannot work. So now you have to make sure that you have to learn how to restructure your spending plan. And how do we do this? So you get a small container envelope, right? Now, again, you don't have to do it this way. I like to do things electronically. So for me, it is easier to write things down. Everyone now has a smartphone, right? Your smartphone has a note section where you can write things, especially the little things. I know that if you're currently working from home, I can speak for myself. I feel like I have saved money because I'm working from home on some ways, but then I feel like I have maybe not saved so much money in other ways. And why is it? Because especially today, we live in such a virtual and electronic world. It is so easy to put your card number into a system or a service and just click, okay, and that's it. You've made your purchase. So it becomes so easy for us now to do things, especially last year where, we didn't want to go out as much. We wanted to, minimize the risk of becoming ill with the virus. So of course you want to do things online. And I'll speak for myself. I was extremely guilty because Amazon became my best friend, because you can buy anything and everything, household products, clothing, anything you can buy at Amazon. So and I can do it from my phone. So I could sit in my couch and click and go, oh, there it is, right? I purchased it and I had it in a couple of days and it was free shipping. Well, then I started realizing, okay, Amazon's coming a lot lately. Like, do I need these things? So I had to go back and reassess my spending plan and recreate my spending plan to say, okay, what are my priorities? What am I going to, why am I going on Amazon? Is it something that I need or want? So again, because we live in such a virtual world, everything is so easy for us now, and by purchasing from the palm of our hands, that we lose track of what we're spending on. So my recommendation is to, write these things down, get a small container or envelope and put your receipts in there. If you are going out and purchasing things, put those receipts in there. And then at the end of the day, calculate and then analyze those receipts to see, okay, did I really go and have, I stopped at Starbucks 3 times this week. You start realizing that some of the small things that we do on a daily basis add up. So that'll give you the opportunity to be able to restructure and then cut back on some of those expenses. And again, making sure if you use a debit card or a credit card for all of your purchases, make sure that you sign up for those text alerts. Of course, I think sometimes data may apply, but there are text alert notifications. Anytime your card is swiped, you get a text alert notification stating that your card was swiped for a specific dollar amount. I personally like that because it's a reminder to me that I spend money again. So I want to make sure I know exactly where I spent the money. And it could be anything. We're so used to now with making it so easy to not even have to go out into a restaurant and get Postmates and just different things like that by clicking. I save those receipts because I am paying for that convenience, right? There's always that extra fee. So analyzing your spending, as I mentioned, if you save those receipts, if you take notes, when you put things in writing, you can see things better, and you can put things into perspective to realize, wow, I didn't realize that I spent this much money on Amazon this month, because I'm just clicking away. So again, if creating a spending plan and being able to control that spending is going to take some commitment to be able to, so that you're able to analyze your spending so that you know exactly where your money is going. Notice trends, as I mentioned, that Amazon, I started noticing all the Amazon boxes in my garage of things that I was purchasing. So notice some of the trends of some of the things that you're consistently doing so that you're able to go back to it and cut back if you need to, and then, or prioritize what are the things that you need and what are the things that you do not need. And then once you have tracked your spending, be sure to add it into your budget. So make sure you add that into your budget. And I'm going to show you an example of a budget and an example of what one of the budgets you can use or how you can create this budget. So I'm going to ask you now, can you think of ways to cut costs in your budget? Or you can write these down for yourself. You don't have to say them if you don't want. This is for you to think, what are some of the things that I can cut down on? You're welcome to share them with the group as well. I love when the group shares ideas, or if you have a comment on ways that you have cut your budget, but can you think of ways to cut costs in your budget, your personal budget?
I mentioned eating in instead of ordering out in chat.
Okay, yes. That
And
is a
soup and a
great.
sandwich at home.
Mm-hmm. Yep.
Not going to Starbucks as often, making your own coffee at home.
Mm-hmm. Yep, those are all great ways to cut back, especially, with, last year, we probably, and a lot of families as well, families with children who are virtually learning or in virtual school, their grocery budget had to increase, right? So their grocery budget had to increase because now the kids are eating 3 meals at home versus at school, they would probably have breakfast and lunch and they would have their dinner at home, snack or dinner at home. But now the families are having to cut back in other areas so that they're able to increase their budget in their groceries because the children are now spending more time at home. And they were probably at home most of the summer last year as well with no traveling going on. So of course those that have to be a family of, I'm going to say a family of four, would have to restructure their budget even if they didn't experience any type of financial transitions in their household. They still had to restructure their budget because there were areas of their budget and of their funds that were being increased, such as groceries. Although they could have cut back in clothing, right, and entertainment because they weren't going out as much, but now their grocery budget had to increase because the children are at home more, so they're eating more meals at home than they were when they were in school. So yes, those are all, Christy, great points. So again, when you work on your spending plan, you may find that you can't afford to spend the way you used to, right?
Mhm.
So this is a great way to be able to put things into perspective when you put them in writing so that you can start realizing, you know, maybe this is something that I need to cut back now. In the event that something did happen, I'm prepared for it. So again, you'll want to make sure that you make cuts to your own budget to be able to, control that spending.
We had a couple of comments in chat also. Dee mentioned COVID has stopped me from retail therapy shopping. And
Mhm,
Maria said, look for cheaper cell phone providers.
mhm.
All of those are good.
Those are all great. You're absolutely right, and I have to agree with the shopping therapy because I don't, I'm working from home, so I don't have to, buy work clothes as much. I'm normally in a corporate environment, so yes, you are absolutely right. It has cut back from that just because there's not, and it's funny, and this is why I go back to the whole virtual world of shopping. When we do go back to somewhat of our new norm. I think that this session is great to prepare you for just your whole finances overall because there's a lot of things that are not going to go back to the way they used to be. We have evolved so much because of this pandemic that we are going to be in more of a virtual and electronic world. There are companies, such as, and I'll use one, New York and Company is a clothing store for women. They made the decision to close all of their retail stores, and they're now just strictly online. So now you have to purchase everything online. And of course, you have to spend 100 or over to get free shipping, right? So they realized, everyone's working from home. We don't know how long this pandemic is going to last. We're hoping that people will start shopping again for work clothes or casual clothes, which is what they offer an overall of all types of styles and fashion. But do we really need to have a storefront? If people are going to, some people may decide to either stay home or when they go back to corporate, they've gotten so used to the conveniences of clicking and having everything delivered that they may not want to go back into, a mall. And they made the decision to close their stores and now do online. And there may be a lot of companies that transition to that. And this is why it's important to make sure you monitor your spending, you control it so that it fits into your budget. So here we're going to take a look at an example of a budget. We're going to look at Jane and Joe's monthly spending plan, right? So Jane and Joe have a net income of $3,000. Okay, so their monthly expenses, if you look at their monthly expenses, you have their housing is 1,200. Always remember that when you are creating your spending plan or your spending chart, 35% of your spending plan will always be applied to housing, right? It's always going to be applied to your housing. And that housing may include your utilities, maintenance for the home, or if it's rent, if you're currently renting, it'll be your rent. But always remember that 35% of your income is going to be applied to your housing. And that's why housing and your priorities are going to always be at the top of your budget. So in this scenario here, Jane and Joe have a monthly net income of $3,000. Their housing is $1,200 a month. They have utilities of $150. They have car payments of $200 and so forth. You can see they have insurance, fuel, cell phone. They have cable of $175, groceries, clothing, entertainment, personal care, medication, and emergencies, right? So if you look at their budget, okay, this was their budget for the month. This was all of their expenses, everything that's coming out of that net income. If you look at the surplus and deficit, right? Surplus would mean that they had a positive there, meaning that they stayed within their budget and they had extra money in there that they can apply to a savings account, an emergency funds account, or did whatever they want with it, right? A deficit means that they have a negative in their budget. So if you look at Jane and Joe's budget for this particular month, they're actually in the deficit. So they're in the negative $250. So somewhere in this month, somewhere in this budget, they overspent, right? And that's why it's important to track those expenses and to monitor your spending and create a spending plan. Because in this scenario, Jane and Joe obviously in here did not track their spending, and they may have overspent somewhere. And they have a negative surplus in here of $250. Now we're going to take a look at the same budget here, and I'm going to ask you the question, can you think of ways to cut costs in your budget, right? We talked a little bit about that, or in your spending. So where do you think that Jane and Joe could have cut back to stay? Where do you think they cut back? So if you look at this budget here, their housing stayed the same, everything stayed the same in here, but they have a surplus here. So they actually did very well for this month because they have an extra $50 they can apply to pay down debt. They can apply to save money, or apply to a vacation account or whatever the goal may be for that $50. But where do you think that if you look at this carefully, where do you think that they cut back to be able to be in a surplus for this month? Okay. So here's one, right? There we go. And entertainment was one. So if you see the entertainment in here, they cut back on entertainment. They cut back on eating out. Okay. And in the world we live in today, this eating out can mean, Postmates. Always remember that when you pay for delivery, like there's not a lot of restaurants that actually have delivery people anymore, because now they have Postmates who does it for them. But of course, there's an additional fee that you pay for that service. So even though you're paying for $30 worth of food, in reality, you may be paying $40 worth of food because of the fee you're paying for that convenience. So in this situation here, eating out was one that they cut back in. The other was fuel. Okay, perhaps maybe they, didn't need to have two cars on the road for gas, or they cut back in some way to get the fuel cut down. And then clothing, right? In the world we live in today, especially if you're working from home, someone had just said, it has saved you from, retail therapy, because you have not been going out to the malls, or they're limited with hours and things like that, or you want to minimize your risk. You don't want to go clothes shopping. So that's a great way to cut back as well in there. So there are tons of ways. Another one in here, can anyone tell me where else would you cut back? And someone mentioned it earlier. Where else could you cut back in this budget here that would help them save a little bit more?
Cable internet.
Yes. Who was that? Leisha?
Aisha.
Aisha. Sorry. Aisha. Yes, absolutely. Cable and internet. Cable and $150 for cable seems pretty pricey, right? But today we tend to stream a lot of things. So a lot of people no longer have the need to have, all the HBOs and Showtimes and Cinemax and all those channels that come along with cable, because you can stream Hulu, you can stream Netflix, you can stream Disney Plus, which are providing you now, because of this pandemic, you can actually watch, in theater movies now come out within a month or so from when they were previewed in the theaters. just so that you're staying home and you're being safe. So yes, cable and internet is another way that they could have cut back. Simply because, again, you can stream other things. So again, going back into the streaming as well, as long as you know and you're stay being aware of, the number of apps that you're streaming for, movies and TV entertainment, because those can add up too, right? If you have, I think Netflix is $14.99, and then you have Hulu and some of the other ones, do your math with it and compare. Is it cheaper to stream and just have my basic cable and then stream the other apps, or is it going to be cheaper for me to have the cable? So again, going back to just doing the math and making sure that it fits within your budget to make the decision. But yes, cable and internet would have been one. The other one someone mentioned earlier was cell phone, right? Maybe shopping for a cheaper plan on cell phones as well, so that you're able to cut back a little bit of that. Because again, that is a fixed one, right? Those are fixed expenses that you're going to have to make those payments the same every single month. So that's another way that you could have cut back on that as well. Utilities you can't control, right? That is not a fixed expense because that can change from month to month. And your groceries. So again, they pay. So here we have Jane and Joe. They may have children. They have a $500 grocery budget. Again, depending on the size of your family, perhaps maybe buying things in bulk may help you save a little bit more, where you can cut back on some of that expenses as well. So do your comparisons. Do you want to shop at Publix, or do you want to shop, at Sam's Club, get wholesale, or even shop at like Lidl's or Aldi's? They have great products for, third of the cost. So again, those are ways that you can help minimize and cut back on some of that spending. And these are things that you may need, such as groceries, right? We need to purchase groceries. And if you notice in this budget as well, they added to their budget, and they added it as an expense. If you look all the way at the bottom, emergencies, that's important. That is extremely important. So Jane and Joe actually budgeted $100. They added it as an expense to their budget. It's almost like paying yourself first to make sure that they are saving money. Okay, so before you cut back on that part of it, look for other areas in that budget to cut back if you can, so that you're not cutting back from the funds that you would like to save. Again, whether it's for a goal you may have, for retirement, or for emergencies. So that is important, because if you happen to experience a transition, a involuntary transition in your life, you want to make sure you have some funds in there to help you cover any expenses you may have to cover, such as your mortgage. Because it doesn't matter what you experience in life, you're still going to have to pay your rent or mortgage. That is still expected every single month. Does anyone have any questions so far on this budget example? Okay, and that's okay.
No one's mentioned anything in chat.
No? Okay. So now we're going to go into, so of course, we talked a little bit about assessing your finances, knowing what your net worth is, how to create that spending plan, how to control spending and be aware of what you spend so that it fits within your budget. We talked about restructuring your budget. We looked at the two examples with Jane and Joe where they could cut back. So of course, we have to as well deal with debt, right? Because if we experience any type of changes in our financial lives, debt is still going to be there. Debt is still expected to be paid every single month. So how do we handle that, right? So how do you handle that is by you start listing your debts, okay, in order of importance. So if you owe mortgage, that is important. So we know that the mortgage needs to be paid, right? So again, if you were to list your debts in order of importance, what would you say to yourself? What's important to me? What are the things that I should be listing as my priorities? Well, one should be mortgage. If you have an auto loan, your auto loan, right? Perhaps taxes, if taxes need to be paid. Then you start listing your credit cards, your medical bills, and things like that. So any personal loans, those kind of things. So you absolutely want to make sure that you pay those priority bills first. That is important. So your mortgage, car loans, those are the things that are going to be top priority. Just like you've seen in the example with the budget, those are going to be top priority. in there. So people often tend to pay their credit cards first because those are the companies who call the most if you miss payments and things like that. But of course, your priorities are going to be your mortgages, auto loans, and things of that nature. However, having, to place, again, sometimes we got to put a hold on certain things. But again, if you find yourself in a situation where your priorities need to be paid first and you're afraid that you're not going to have the funds available to pay, some of the other debt, make sure that you contact those creditors. Make sure that you contact and see if they have any relief programs or any way that they can defer the payments for you, or help you with a debt management plan so that you don't default in any type of debt that you may have. So dealing with debt, sometimes there are options to help you lower payments or make payments more manageable, as I mentioned before. Let's talk about refinancing or loan modifications. So refinancing and loan modifications, depending on your circumstances, some lenders will refinance an auto or a home to give you lower payments so that it can become affordable. And not just affordable, but also be able to help you adjust your budget so you're able to make payments elsewhere. Okay, so in the case of a mortgage loans, lenders may actually rewrite the terms for you as well. But again, that's a case by case basis. So reach out to your mortgage company or reach out to the creditors that you may have loans with to see if there is a way that they can modify the loan, or if your home has the value in it, can you refinance it? And it's exactly what I did when my husband was furloughed last year. I refinanced my home. The rates were great at the time. And so I made the decision to refinance the home, and it was the best decision I made because it lowered my payments by, almost $300. So that was an extra $300 that in the event that his unemployment was going to be more long-term, we had an extra $300 to be able to cover the expenses in the household. So again, that is an option if you are a homeowner. Let that home work for you as well. Debt management programs. So there are debt management programs available as well. Ask your creditor about debt management programs to kind of help you. Again, going back to Green Path, they have, counseling and educational as well as management programs, but seek out some of that information. I do like to tell people, make sure you do your research first. Be very careful and wary of different types of management programs that will, they want to charge you a extravagant fee to help you negotiate and pay bills. Make sure you just do your research before you seek out those types of services to make sure that they're legitimate and that they're not, making you pay a ridiculous amount of months. Because the whole point, right, is if you are having these if you're in this situation, is because you need assistance with making sure these things get paid. Why would they charge you $200? There's always going to be a fee of some kind. So be very careful and wary of those types of management programs, or seek one that is trustworthy, and look at some of the reviews before you make the decision of utilizing their services. Or you can do a debt consolidation. Debt consolidation can be done with one loan. So if you have multiple credit cards and you're making payments, to 3 or 4 different cards, perhaps, contacting your financial institution and, applying for a debt consolidation loan where you can combine all of them and have one payment, one interest rate. That will perhaps, make the payment more affordable for you, and you're not paying all these different, you're not sending money to this credit card, and that credit card, and paying all these different interest rates, and then being forced to make minimum payments because it's all you can afford at that time. So perhaps it's better to consolidate the debt, have the one payment, and then if your budget is in a surplus, just like Jane and Joe had the extra $50, maybe that's an opportunity to apply that $50 to that debt so you can start paying it down. And then, as I mentioned, and I have been mentioning throughout the session, contact creditors on your own as well. So there's going to be companies out there that are going to say, oh, we can contact all these people for you, negotiate all this stuff, but you're going to have to pay us this much money. Be very wary and careful with those types of debt management companies. I always like to tell people to start with yourself and reach out to the creditors on your own and see what types of services they have that can help assist you. And I believe that they are still offering, most credit card companies, most financial institutions are offering relief programs or, modifications and just different types of programs to help people during this time. And for more reputable counseling agencies, you're always welcome to visit www.n as in Nancy, F as in Frank, cc.org. And if you want to type that, Christy, in the chat, they can have that available. So it's www.nfcc.org. Visiting that website will help you find additional reputable counseling agencies. So something else that is important is knowing your rights, okay? When bills become delinquent, creditors will start calling, right? However, you do have rights under the Fair Debt Collection Practice Act, okay? And these rights don't eliminate the debt, but they can make life less stressful for you. So you do have rights. So again, prohibiting debt collectors from using abusive, deceptive, and unfair collection practices. Okay, if you feel that a debt collector is, just using an unnatural way of trying to collect the debt from you, you have rights to be able to dispute that. Establishing procedures debt collectors must use in contacting the debt credit and user. So they have procedures that they have to use. So if you feel that you're being treated unfairly in any way, you do have rights. And establishing how a payment must be applied. So know your rights. You can always visit if you feel that your rights have been violated in any way. You can always file a complaint with the Consumer Financial Protection Bureau, okay? And you can find more information. So if you needed to file a complaint, you would go to www.cfpb.gov. And that again is the Consumer Financial Protection Bureau. And if you would like more information about the Fair Debt Collection Practice Act, you can visit www.consumer.ftc.gov. So this is very important to know your rights because, again, if you're in a situation where, it's already stressful, right? Because you're trying to figure out how to manage the debt, how to make sure the debt gets paid. And then you start getting, these calls you feel that are, personally harassment to you. You're always welcome to file a complaint with the CFPB. So get your action in place, right? So what do we do is making that plan. So your action plan is to make a plan. So if something happened in your life that is affecting your financial stability or your financial life, then you have to make sure you have an action plan. So making sure you're making that plan. Prioritize bills into wants and needs. I've mentioned that throughout this session. Going back to what are the priorities? What are my priorities when it comes to my budget? What are the things that need to be paid? Okay, and do I just put my wants in the back burner at this time? And it's okay to do that. It's okay to, put those wants in the back burner until you can kind of get everything structured. So, and if the funds are available, then, you treat yourself to something that you want. Create a list of options, okay? Always make sure you create a list of options. Lower costs as needed. So cutting back on some of those expenses, trying to find ways to cut back on some of those expenses. Prioritizing your debts. What are the debts that need to be paid first, such as mortgage, car loans? And then, of course, seeking the assistance of those creditors for the additional debts that you may have. And then filing complaints if creditors violate your rights. Always make sure that you know your rights, okay? So you've done A lot of the work now have a plan of action to manage this transition and its financial challenges more successfully and with less stress. So that is extremely important. So what are some of the financial resources available to you? Okay, so management plans, debt management plans, such as debt management programs that set up payment schedules for you to repay your debt over a specific period of time, generally 3 to 5 years. Then you have debt settlement plans. And again, a lot of management plan companies or financial counseling companies will offer these types of services. And this is why I wanted to make sure you were familiar with some of the terminology of what these plans were. The debt settlement plan is an agreement between a debtor and a creditor to pay off any remaining debt that you have and to be able to reduce that amount. Then you have debt consolidation, as I mentioned before, where you can consolidate all of the debt that you may have. So this way you can have the one payment, perhaps pay that debt down sooner if you're able to, when you get back into a more normal financial, to make more payments or extra payments so that you can bring the debt amount down or pay it faster. Loan deferments, again, there are some financial institutions or creditors that will provide a deferment to excuse you from making loan payments for a set period of time. I know that a lot of financial institutions and creditors were doing that last year for individuals who were laid off or furloughed. So you can ask for a loan deferment or a loan extension as well. So with a loan extension, if you're unable to make your payment due to a temporary situation, such as a furlough situation, you may be eligible for an extension on an installment loan or an installment loan account. So that's going to allow you to postpone one or more monthly payments so that you remain current on your loan and you don't default on the loan and it doesn't get reported negatively. So these are some of the management plans that are offered. Again, I always like to recommend that you seek directly your financial institutions or anyone you may have a loan with or a credit card with before you seek services from a debt management company, because 9 times out of 10, the creditors will probably be able to assist you without you having to go to an organization that will provide you with those services. If you did need an organization to help you provide you with those services, I recommend Green Path Financial Wellness. They are a partner of Sharonview, but they partner with all credit unions. So if you're a credit union member, you can utilize their services as well. So what are some of the community resources? These are some websites you can visit that will help you provide you with some community resources, such as unitedway.org or by dialing 211. So there's often many community resources that some of us are unaware of, right? And it's not just, United Way will tell you about, churches that may help. Again, if your budget, if you don't have it in the budget to be able to purchase a significant amount of food for a family, there are food pantries. There's a lot of help and assistance in the community that you can seek. Benefits checkup, that's another site that you can visit as well to be able to see what benefits do you have available to you to help you during this transition, financial transition. And then healthcare as well, that's important, because remember, if you're a person of one, right, or a person of two in your home or three, and there's only one income, and that person gets laid off, or that person gets permanently laid off or furloughed, medical may stop, right? And perhaps you may need that. That's important. So visit healthcare.gov. They have a lot of resources there as well that can talk about some healthcare services that you can be provided, or assistance with healthcare services as well. And as I mentioned, Green Path Financial Wellness, they are a partner of our organization, but they partner with all credit unions. They're a nationwide nonprofit that provides financial education and tools for people to lead financially healthy lives. And they do assist with financial assessments. So if you're not too familiar on how to estimate your net worth, they can help you with that as well at no cost. Housing counseling as well. They also do bankruptcy counseling, and most importantly, they do debt management as well. They're a great organization. They've helped a ton of our members, not just during the pandemic, but prior to that. We had situations in certain areas with hurricanes and just things that have happened throughout the years, and they've been able to help a lot of individuals. So we highly recommend them if you needed their services, but you're welcome to visit them. They have additional resources and education that are free as well. So there's no charge for it or anything like that to be able to utilize some of their educational services. And that is the end of our presentation. I thank you so much for being here this evening. I will open it up for questions. Before I do that, I do want to, I got this quote by Robin Sharma that I thought was very appropriate for this session. Obstacles are the cost of greatness, right? So if we don't get through, we can overcome obstacles to become greater and better. So I thought it was a great quote, to end the session with, but I will open it up for questions at this time or comments. And you can write those on the chat or you can unmute yourself.
I did a shameless plug for the library saying it's a great way to save on entertainment and learning expenses. I mean, we're not trying to compete with Netflix or Hulu, but what we do have is, great educational programming, great children's programs, documentary film, genre stuff. So it at least can help fill in some of the gaps in your budget.
That's a great point, Chrissy. You're absolutely right. It is a great point. There's so much, there's more to Netflix and cable. There's so much more you can learn outside of watching television. But so that's a great point. Any other questions or comments?
Let's see. Dee asked, can we receive these sites in an email? And yes, the library is the best source for entertainment and education. Aw.
That's great.
Hooray. Thank you.
That is great.
Is there some way we can send some information to them?
Yes, we can. So I'm not sure, Christy, if everyone had to provide you with an email address.
Yeah.
Every they did. Okay, so what I'll do is I will send it to you first thing in the morning.
Okay.
In a PDF format. And for those who are interested in this presentation, yes, they can have a copy of it.
Oh, that's great. Thank you so much. Everybody will really appreciate that. Well, I'll go ahead and stop the recording here. But if anyone else has any other question, please feel free to jump in. And thanks again, Angelica, for your presentation and your time today. We really appreciate it.
Absolutely. Thank you for having me this evening. Again, this is great information, valuable information. It's a great takeaway. Again, and if your finances are in order today, that is a wonderful thing. But this is a great way to kind of get you. For me, it's just to keep you aware of, okay, am I doing things right? Right? What if something happens? Am I prepared for any type of situation that happens within my household? So I know for me, it was an experience last year to fortunately, again, to know all of this information, to have all this knowledge, to prepare myself for the what ifs, because who knew that a what if would happen in 2020, right? And it did to millions of people. So again, I'm glad that I was prepared. I've always been prepared for, a loss of income in the event of a medical reason or job loss, but I didn't think that it would be because of the effects of a pandemic, So, things happen, right? Life happens. So it's great. It's good to be prepared, but it's also good to know what's available to you. How can you be assisted in the event that these things happened?
Well, I'll go ahead and share with everyone the resources that you'll send tomorrow. And again, thanks to everyone who came out today, who participated. We're glad that you were able to come, and we hope to provide more of these in the future.
Sounds good. Well, thank you all for being here this evening. I hope you enjoy the rest of your evening. And I think at this time we are pretty much, this session has ended. Yep.
Yep.
Sounds good. Well,